I think Nilesh Shah of Kotak AMC is also with us. And Nilesh, that's the question to you. I know, somehow your views and Naren's views sound fairly similar. Invest for the long term. Right now is a good time to buy as well. What can the budget do to enhance the investor decision, Nilesh?
The budget can do many things to enhance investors' decision.
Things, Nilesh. I know, grandstanding, there could be 10, 12 things, but that one or two things that are top of your mind.
One thing, why not increase the equity-linked savings scheme exemption exclusively for mutual funds by 150,000 rupees? Make people long-term invested in this country. 1% of population is investing in equity mutual funds or equities. There is potential for many more to join in. Give just 1 year exemption so that people can come in. That will create domestic capital which will be available for economy, and then we can recreate this whole owning India by Indians. The second thing which budget can do about is walking the talk of the past. In the last budget, finance minister talked about uniform KYC. It's extremely important for us to make entry of people into capital market easier compared to, let's say, buying gold. Either make buying gold difficult or make entry into capital market easy. Opening of demat account, opening of broking account, transportability of demat account. I mean, all these things are today complex exercises. Make it simple. So uniform KYC and 150,000 exemption for equity-linked savings scheme. I'm sure that's good enough.
That's outside the preview of the budget, isn't it?
No, that's part of the budget. You talked about uniform KYC last year. Okay. 12 months were good enough to complete it. Now the work is already going on, but can we put it on a fast track? And this 80cc exemption can easily come in the budget only.
I also get a sense that the street would be watching out for some sense or some directional sense on what will happen to the corporate tax structure. Corporate tax, because ultimately what markets they want a booster to the EPS, and if companies will pay lower taxes, that will boost the EPS. So what is that number markets are working with?
So let me give an answer on a lighter vein basis. Optically, we can increase our profitability growth by 2% if we take CSR contribution above the PAT number into below the PAT number. That will straightway increase 2% of profitability.
That's financial jugglery. That's not budget
jugglery. But everyone else in the world is doing that. Yeah. So when 100 becomes 10, it's a 90% drop in inflation. When 10 becomes 100, it's 900% increase in inflation in India, even though prices have remained same. But world over, other countries, including developed world, include that 10 to 100 movement as features enhancement and say there's no inflation. So we can do a little bit of jugglery, but that I said it was in lighter vein. On the positive side, probably what we are looking forward from budget is balancing this fiscal deficit funding, not by taxation, not by borrowing, but by monetization of assets. The government has about 45 to 50,000 crore worth of SUTI holding, 20,000 crore worth of Hindustan Zinc holding. And if you can't divest them, then can we look at divesting some road assets, some power plants, which probably will be an annuity income for sovereign funds. So let's take the advantage of lower interest rates in the global market, sell our core assets, which we have already built, and use that money to build newer assets.
The disinvestment number, Aisha, has been such a disaster. 69,000 crore was the estimate for this year. I think what they managed to achieve is just bits and bits of that, closer to 25,000 crore.
But to be fair,
18,850 crore to be precise.
Well, you'll have to add back NTPC. So that's another 5,000.
Yeah, but
that
look
takes
at the
it 23,
market.
24,000.
Who would buy into, the government's pieces of the pie?
So they'll have to come out with something
strategic. It's not completely
strategic.
their fault, is it?
Yeah, they'll have to come out with something strategic.
At a market like this.
Yeah, that's because much of your wealth actually is in oil companies. It is in commodity companies, whether it is Oil India or ONGC or for that matter IOC. Now you have to really think about selling strategic stakes. Does it make sense for you to run a hotel? Does it make sense for Government of India to have presence in an airline? So there are these strategic businesses which you should really vacate. And if you vacate them strategically, you will always find a good buyer as long as you're ready to state majority stake.
Yeah, I remember, Nilesh, 2 years back, you had that brilliant creative idea. Rent the Taj Mahal out for Indian weddings.
Absolutely.
I still remember that one. Okay, just a minute left to go before we hit the pre-open rates. Not like the pre-open rate is going to be any indicator of how the market volatility is going to pan out once the normal trading actually kicks in. But just to put it into perspective, the SGX Nifty has seen a bit of a recovery actually from where it started off. Because when it kick-started trade, we were down about almost half a percent or so. We were just about lurking around that 7,020 150 odd level. So we've seen a bit of a rebound. Having said that, Asia is a bit of a volatile picture right now. Shanghai is closed lower by about 3%. Shenzhen has been hard hit, about 5.7% downtick. Hong Kong, a flat start, and then it's down by about almost 1%. And Nikkei as well has ebbed off some of its opening gains. So just waiting by to see what the first rates on the markets are going to be like. Nikunj, any guesses there?
Well, if I go by the SGX, 20 points down. If I go by what the ticker in the screen is telling us...
flat, with the amount of confusion that there is in the market about whether or not we're going to see the dreaded LTCG. You never know, I mean.
You never know what will happen at 9:15. You can still predict 9:15. 3:30, where will you close? No way. It's a function of, historically...
That 11 a.m. will entail.
Exactly. And, frankly... Okay, there you go. The pre-open rates are just surfacing up on your screen. Don't go by the pre-open rates as a true yardstick of what lies ahead. Historically, budget days are always about...
I win. It's a flat start. 70,
it's a flat start, but it's coming down. It's
at.
coming down 7 points up. It's pointless to get into market guessing today because it's an emotional market. Yeah. Markets are short, and little bit of good news and no bad news actually can really do the trick for the bulls right now. So Nilesh Shah, is 7,000 the new base for the Nifty?
For the time being, probably, but a
what
lot
is
will...
time being?
How
1
long
month,
is
2
this
months?
time being?
So, till 11 o'clock. Because a lot will depend upon the budget. I mean, obviously, we have discussed a lot on the equity side. But I think we are also entering a phase where bond markets will have an impact on equity market. There is worry in the bond market from a supply point of view. The net borrowing program of the government has remained constant for last 4 years. But this year, there is increase in state development loans as well as Uday bonds. And on top of it, there is worry that the fiscal deficit target might be relaxed to fund capital expenditure. So this, on one side, increases the supply, for which bond market today clearly doesn't have the appetite. On the second hand, RBI, which was doing OMOs of approximately 1 lakh crore in the past, is not doing that speed of OMO. Plus, the liquidity has been tight. So my worry will be on the bond market impacting equity market.
Do you expect the finance minister will commit expenditure or commit money to all the OROP and pay commission schemes?
Yes, definitely.
Full commitment?
In the railway budget, they have provided for 7th pay commission in full. So I'm sure the same thing will be followed in central budget.
So in the short term, is there a case for consumption stocks to rally? Because 1 lakh crore is coming, and that will come from 1st of April, including arrears. So that will change the consumption patterns. And Aisha, we must not undermine the importance of that. I mean, 3,000, 4,000 rupees on an average will go higher every month for an average government foreign government employee, and Government of India currently is the biggest employer. So let's not undermine the importance of that. And there you go, Aisha, the customary shot.
The tan leather briefcase which contains the budget document, and the finance minister also smiles there, flanked by Minister of State for Finance Jayant Sinha right there with him, and there he is flagging that briefcase which contains the budget document. In just hours from now, we will hear out what the finance minister has to say and what really the budget fine print is going to be like. There you go, him just showcasing and show-offing the budget document right there. It's a customary ritual. We have that every budget. And the finance minister comes in front of the media to just flag off that briefcase which contains the budget document.
So, Nilesh, what is the smile telling us? Bulls have the last laugh, or bears?
I'm sure
the budget is coming.
I'm sure the bulls have the last laugh. If not this budget, next budget.
Acha, now you've given him a leeway of 1 year. Okay, I just want to revisit, what the rupee markets are up to, because I think, like Nilesh highlighted, the bigger cue really is in what is happening with the money markets right now. So I'm just going to quickly bring up the rupee as well before we move any further, considering the currency has started off with weakness, and 68.71, that's the tick that you're seeing currently on the rupee. But Neeraj, what is the heat map entailing?
Well, the budget wall is the focus, isn't it? And just get up the heat map behind us, and there is a lot of green on the screen. As you can see, let me just show you the whole wall and you will see what I'm talking about. There's a lot of green. There is very little red. Yes, these rates will change, but just look at the cluster of gainers out there. and a couple of names have stayed stable. So Ultratech, for example, is this 2.5% gainer, and because of the deal with JP, I think Ultratech has been staying stable today. I'll also watch out for where ICICI Bank is. Somehow I can't spot it right now, but it should be amongst the top gainers, or at least should be in the green by virtue of the fact that it is one of the key lenders to that group as well, and maybe that should have a bit of a flavor too. But yes, suffice to say that on a day when you expect the markets to remain muted, there is very little red as of now. Maybe this will change at 9-8, but for now there is very little red. There's a lot of green on the screen, and somehow financials seem to be right there. So there is SBI out here, there is PNB here, there is Axis Bank. So there's some bit of financial flavor to the green that we have on the screen. As I said, maybe this will change, but for now, the way the screen has been moving for the last 2 or 3 minutes seems to suggest that probably we'll start off with a little bit of green. But I like Nilesh's answer, Aisha, where he says that the bet is only for the next two hours until 11 a.m. And even if bulls don't have a laugh this budget, they'll probably have a laugh the next budget.
Yeah, the entire dynamics change, right? Once the finance minister opens that tan briefcase of his and starts reading out the budget document. For now, you really can't take a whole lot, from what the market mood is like. The currency has started off on a weak footing. The yields continue to hold up. So it's status quo really for the money markets. If not, they have worsened. And I mean, the Nifty opening at 70.50, just an uptick of 20 odd points, is by no means any indicator of what the market is going to be like. And the globe is a little jittery considering China is down about 3.5%. You've got the Shenzhen colliding by about 5.7%. So yeah, China continues to stick out like a sore thorn. But Ramdev Agarwal as well is right here with us in the studios. Ramdev, good morning. Just now we had the finance minister flag off his briefcase. He had a huge smile on his face. Does it seem like the body language seems to be like it's going to be I'm with the bulls, or is it I'm with the bears?
I mean, his hard work of last 2 months has come to an end, and this is now exam time. I think yesterday Prime Minister Saab also kind of termed it as his exam, and they're all set. And so I think today it will be very interesting to listen what kind of contours they have set in a very grim global environment, economic environment.
Absolutely. But Ramdev, I just remember just last week when we were chatting, and Ramdev was telling me before the show कि बेटी की शादी कैसे होती है, dividend tax से, right? So what happens if LTCG or a dividend tax comes about? Is it, I mean, do we see a big shake off in an otherwise in any case weak market?
See, बाजार में क्या होगा हमको नहीं मालूम. I mean, we don't know what is going to happen in the next 1 or 2 hours or 4 hours.
That's a big sentiment spoiler, and not for one day, right?
It's already, if you are talking about it, it's there in the price.
Okay.
Don't worry about it.
A long-term capital gain tax is in the price?
I mean, I wouldn't know. First thing is, we don't know what is going to come because it's a complete package.
Probability. We're discussing probabilities.
Yeah.
So at 7,000 on the Nifty or closer to 24,000 on the Sensex, are markets pricing in all the bad news?
To some extent, yes. I mean, whatever you and me are discussing, they are all priced in. I mean, to the extent, but other things must also come. So,
what are those other things?
Other things like, say, some kind of corporate tax reduction, some phasing out of the subsidies, solid resolution of the banking problem. They have opened the can of worms. I mean, like, they recognized now in this quarter. So now it has to take the logical conclusion.
So what is, from a market standpoint, not from the Aam Aadmi standpoint, what will be a great budget, a good budget and a bad budget?
I mean, you have to look at it in totality, and the issue is it's just not about one poison here and there. The whole lot of, I mean, see, first thing is we are not speculating.
Of course.
Okay. If you're asking me what is going to happen overnight, so that's not the game. I mean, at least take a 1 year view. Say, if you look at the 2013 budget, 2014 budget or 2015 budget, we had a bumper 2.5, 3,000 points move. Okay, I mean, March to March, if you see, it was more like 6,000, 6,500 going to 9,000. Then from 9,000, when we said it's a wonderful budget, good time, we have here 2,000 points down. So it's not only about budget only. See, as far as the stock market is concerned, you see the global backdrop. What is the price of the oil? Oil 2 years back was 110. Last year was 60. Now it is as low as 35. My sense is oil will be much higher next year. And that might pull the market. And we might be still barking at the budgetary. So there are a lot of global forces. What will be the behavior of FIs? They're in redemption mode. January saw the biggest redemption worldwide in the equity mutual funds. Obviously, we saw our share of selling. So these are issues also you have to tackle when you look at the stock market. And so there are multiple forces which are working right now. And I mean, today, if by chance FIs decide to sell big time what they did till Friday, then even a wonderful budget might look not so wonderful. So there are a lot of forces, and shorter term it becomes even more difficult.
Right. Nilesh, I'm going to come to you on this one really. Like Ramdev also said, that budget may be a one-off event. Sure enough, there is going to be some volatility, some more FIIs, and maybe DIIs also pulling out if there is a taxation change coming about. But come next day, and it's going to be back to the globe. What are the FIIs going to look out for from this budget? Is it only going to be the fiscal deficit number, or is it going to be something more meatier than that?
So I was in US beginning of
yes.
this week. Met couple of clients over there. India is there on the radar of everyone.
That
Everyone
it has been
tracking.
forever.
And it's
What
been there
more?
forever, but
Yeah.
everyone has been tracking. And the questions which came were quite minute in details.
Like,
They even asked like, what will be the strategy of political parties going into UP election? So clearly we are there on the radar, but right now we are facing the headwinds of GEM fund redemptions. I mean, there is so much of redemptions in emerging market funds that they are just not having allocation towards India. So unless until we see this global emerging market redemption slowing down, it's difficult for them to invest in India despite our fundamentals, despite our budget.
Compulsions and adjustments are at play, let's be frank. And the point you could ask yourself is that are foreigners really selling Indian stocks because they worry about long-term capital gains? The answer to that is no, because 65% of the global money which has come into India, that's actually coming via the 3T route. So we are more nervous, Ramdev. At least the street is nervous with the assumption that the taxation structure will be changed. And who's selling this market? Foreigners are selling the market, and 65% of the global money which is coming to India is coming via Mauritius and Singapore, and their life will not change for next 2 years.
So those provisions would be far more sensitive to the what happens in longer term in the market and shorter term.
The disconnect between activity versus what the fear is.
Yeah.
I mean, if at all long term is making a comeback, it will change life for an average Indian. It will not change life for foreigners.
The worry there is, Nikunj, will the government always believe in Atithi Devo Bhava? Will FI always be given preference over domestic
Come on, are you saying
investors?
that GAR is going to come back?
No. So what we need is a level playing field. Anyway, already 34% of India's listed market cap is owned by foreigners. If you remove the promoters out, only 10% is left with retail Indian investors. Now, let's not create a level playing field where this 34 becomes 51 and this 10 becomes 0. The whole point is, will we always give preference to foreign capital or will we focus on domestic capital? India is a net exporter of capital. In 10 years, we have imported $221 billion of gold, silver and diamond on a net basis. The FII flows in debt and equity market put together over last 10 years is just $190 billion. We want efforts in Jaipur and Ahmedabad and Rajkot rather than in just New York and Tokyo and London. We need foreign capital, but we also need domestic capital to be part of domestic growth story.
Right. Okay, just about 2.5 minutes left. But Ramdev, I just want a quick 30-second response from you before we get in today's top ideas as well. Your view has been that there should be DDT should be done away with. If that doesn't happen, if there is some tinkering on STT and no tinkering on capital gains tax, would you be happy with the taxation developments for the capital markets? A quick 30-second answer, Ramdev.
I don't think Ramdev was able to, get your question. There is also a fear that the STT on derivatives could change. The STT on derivatives could go higher. Will that sap liquidity if that has to happen? I'm asking you difficult short-term questions, but that's the moot point. You'll appreciate my concern.
Yeah, I understand. I mean, if you discourage any activity, you make it, particularly derivatives and all, they're very sensitive to the cost of transaction. Investing is not that much sensitive to cost of transaction because, okay, 5 bips here and there, but in derivatives it makes or breaks. So clearly it will have a
So
huge
don't
impact.
do anything which will disturb the rhythm. As it is, the back of the market is broken, Neeraj, and I think the messaging from the market panel, Neeraj, is that stick to basics, and sometimes no news is actually good news.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.